Hey there, everybody. Today, we are joined by Batuhan Ultunjel, serial startup collaborator, mentor, and advisor with a track record across more than 600 startups at accelerators and companies like Techstars, JP Morgan, Alchemist, Mana, Metis, among many others. It's truly a treat to have Batuhan here with us. Welcome, Batuhan.
Hi, Jose. It's my pleasure being here.
Great. Well, let's start at the top because it sounds like you got up there with the amount of startups that you've helped. How did you get into that world?
Well, I got into investing with my first experience during my MBA tenure in Bocconi University. For the MBA internship, I joined Editya Birla's team where we worked on a online fintech startup and also from an inspector point of view towards investing in that company from the group's perspective. Working on both ends gave me a quite edge. Then when I moved back to Italy, I started working in VC world. Then I moved back to Turkey, Istanbul, and I kept working for different companies, different investment firms, sometimes worked with government, learned the game from their perspective. Sometimes I collaborated with large players in United States for our region and for the global investments, such as my little hat in JP Morgan's Techstars program or Techstars in general or Alchemist. So, it was a journey of getting beaten by the market in different countries, different geographies and verticals.
Right. I mean, it sounds like an amazing time to be able to live out there and work in this sort of space. So I'm assuming that you've really deep in the European startup field, right? In the European startup scene. So what are you seeing right now? What have you seen historically around the difficulty or the differences of starting something in Europe versus in the US?
Well, in the day you are starting, borders are getting lower and lower every day. However, when you are starting in Europe, you reach less resources in the beginning in terms of human capital, in terms of mentors, people that can talk to, also in terms of access to early resources, not specifically money, but also can be resources that can come along with money. And also the financing are much in the earlier stages of the venture capital ecosystem development compared to especially North America. So considering this fact, you reach less grants and less investment most of the time.
Right. So I can imagine now for a European startup who does want to end up growing, scaling in some capacity, should they assume that they'll get some sort of investment provided they have the right numbers? Or should they consider, better yet, bootstrapping from the start and assume that they don't get any capital?
Actually, there is no single way which works for all, but you have to be aware of there are less number of doors you can knock. There are less number of average resource you can reach from each door. And a very successful company in general, speaking, a very successful startup in Europe can make a very amazing round, respectively, which would be compared to two tiers lower in North America. For example, if you're a very successful startup making Series A, it can even get corresponding to government funding. Very large and very specific company can get from the government as a grant in United States. I have seen examples. I have worked with examples of that. We had portfolio companies receiving more than $40 million in government grants.
So they can go after government grants better than they can go after private money.
Yes. That example was in United States, by the way, which unlocked $48 million.
Okay. So, I mean, that's a serious amount of money. So in terms of like what sort of startups tend to succeed more often than not in the European petri dish, so to speak, what have you seen in terms of like patterns?
Well, you have to read the market better because early stages of a startup, when you are starting, most of the time you have to go local and prove them. Because if you are a Spanish or UK startup, which is coming from your own country, if you are not convincing the people which are located in your country, it can be your customer, it can be your investor, it can be your partners, it can even be the Microsoft office or Google office or Amazon office, which is giving you free credits in the beginning. If you cannot convince those people, there is a good chance you will not be able to convince other people which are working, living, and focusing in different markets, which you are not operating and you are not, most likely you are not familiar with. So
Right.
everything, most of the games start with succeeding in the local market.
Right. I mean, I'm assuming coming from a perspective of very limited knowledge on the European startup scene, I can assume that considering that Europe is a bit different in how they approach supporting businesses compared to the US, that it's actually more difficult to start something up in Europe. And by it being more difficult, it actually makes for potentially better entrepreneurs if they can actually get over that initial period. Is that a correct assumption or no?
Actually, it is tougher to begin making 0 to 1, paying for your first employee. It is tougher because earning money is tougher. But after that, if you can survive that part, there is a period which you have less competition and you can reach to talent which their salaries are lower than United States, let's be honest. And you can reach to higher quality of talent to a cheaper way. But let's make sure that, for example, in today's world, the AI is thriving, right? And there can be like 5 main different strategies if you are a AI company, if you are, or at least at some degree associated with AI. You can be providing infrastructure, which we don't much see in Europe. Second, you can run AI models. You can be running AI-powered applications. You can be AI wrapper and SESL, or we can talk about enterprises which can absorb AI in their games. If you want, we can continue over these examples. For example, in Europe, we have Mistral and other some leading examples. But when you look at the AI infrastructure providers, most of the dominant names are rather coming from Europe, or they have already went way too ahead of the period that we are talking about. So these European founders, they also exist in American market, European market, Asian market. So they already proved their ability to expand to other markets. So when you are seeing at this stage a successful European founder operating, also running successfully with some degree of market share in the United States, they are already proved themselves in the market in terms of achieving some degree to expand into other markets. So it is a nice mark of quality. And there is a famous saying about number of passports. If you are living in this part of the world, you have to have your passport. And when you look at the penetration of passports, it is, much higher than developed side of the world, developed markets. Emerging markets has a higher penetration of passports. The main goal behind that is people have to go different places to achieve more than what is currently available in the local market. So the ones already jumping successfully into different markets are cutting that. Then we can talk about all of their AI model builders, powered applications, test tools, and others.
Yeah, I mean that's fascinating to me. The idea that okay, so a European startup essentially is forced out of the crib, so to speak, or out of the nest, and forced to go after different markets. Whereas if you're in the US, you have that one market, and it's a great place to start. But I mean, how do you expand internationally beyond that becomes a question. So a team over in Europe has that capability earlier on. Sounds like with a lot of different international perspectives considering like the density of the cultures. In terms of the AI, the shift in AI, the lowering the price of talent, or if not, multiplying the effectiveness of current talent. Do you see that this could potentially open the door in some capacity for more AI startups, more AI founders in the European scene at the very least?
Actually, yes and no, because when we are talking about the numbers, we have to make a very good understanding of the landscape. I believe which is one of the largest problems both founders, both companies, and both investors are currently facing, because the cost of development is significantly lower. The cost of, putting something to the table is gone much easier. As a result, there are lots of people are building new products, but they are struggling with positioning from different aspects. And one of the main aspects, the first thing is where you are positioning. Are you positioning with your technology? Are you like an infrastructure provider, or are you making very large models, or are you using this technology? This is the first point to understand very well and put your game accordingly. The second point, it comes to what is your market, where you are going after. Because looking at European examples, there are very successful startups which are only focusing in their local markets because their target audience is already positioned in their local market. And if they have a local untapped market of $500 million, just saying, if they can capture only 50, half of that, 250, just given the fact that we are talking about AI, just multiply that with 10, you are already exceeding $1 billion valuation. So
Right.
my point is, it truly depends who you are running after. And lastly, the unit economics, because we started to see lots of very high quality of products. Fortunately, even on the long run, their cost structure is not very well structured. They are depending on the external money to run their products. They are non-stop consuming VC money today, consuming investor money today, and most likely, if they come to a point that their unit economics is not viable, so they are pushed out of their business, basically. So in Europe, it is very tough to make a general comment on that, but we should be looking to specific niche of what is our business model, who are your target customers, what should be the game plan to capture that market, and what is the unit economics. And of course, there are other people who are also looking all of these, who are the investors. And if everything goes in a meaningful way, will it bring enough return to the investor to fit their demands?
Interesting. So it sounds like to me that if local startup founders within their markets, let's say Spain or Italy or France or Belgium, wherever you are, you have a local market that is relatively untapped, and it could potentially also be, it can also have its own barriers, right? Because there are cultural and systemic and also language barriers between markets. So you actually have, in a way, your own confined petri dish that you genuinely personally understand better than almost anybody else. So it's almost like anybody in neighboring countries, they can't really invade your country for, in terms of like startup speak. You have an opportunity. You have an almost untapped, unfettered access to a local market. So startup founders, if you're listening, it sounds like that's the opportunity here, especially considering that AI is lowering the overall cost of starting and scaling in many ways. Is that a correct assumption?
For some customer groups, for some industries, it is. Let's start with banking industry. Banking industry has a fundamental need, which doesn't change for centuries. However, the way of it is delivering it to the customer, to the end user, is non-stop changing every day. Currently, almost every country in our region are operating on different regulations and different structures and different requirements. So even if you are operating in Europe, you have to change your positioning, change your product, change how you are positioned with your value offerings towards the regulations and value creation. It is very different. And also consider the fact that if you and me, we are starting a fintech today, looking at B2C customers, we have to understand that in different countries of Europe, there are different local companies which are already capturing that demand. So we also have to tailor our country-specific approach regarding to that competition. This is one of the most severe examples I can think of, according to regulations and the market structure. However, let's go to the opposite end. Let's think about a cybersecurity startup. Its demand, the way game is played, it almost doesn't change unless you are targeting at the infrastructure architecture of your customer. I mean, if you are just doing above the line operations for cybersecurity, the game is almost same to my knowledge, to my understanding. And with no offense, I'm not the expert on cybersecurity, but this is how I'm seeing and interpreting, because cybersecurity is a very, very global operation, and it is not a question of in which side of the world you are doing that, but it is like a question of in which language you are operating, in which group of target hackers or other software developers are targeting at your company.
Got it. Okay. So it comes down to like the industry and what you're actually going after, and there are some more global aspects to certain markets, some more local aspects to certain markets. So in terms of figuring out, let's say somebody wanted to start a business or go after a market in Italy or let's say Turkey. I mean, how would you recommend they go about that?
Actually, it is, I believe it shouldn't be going after a company, launching a company. It should start with the problem. It should start with the burning. I mean, I understand there are very successful examples of let's make a company and decide on what we are making that. But I'm a true believer of founders who are obsessed with their problems are becoming better entrepreneurs. I don't know if there is a specific data for that, but I would be happy to dig after. But my point is, you have to make sure that you have a very good understanding of some region, some specific target users and their current needs, if not, it is fed or not, or how well it is fed. And if you are going after an untapped potential, untapped market, what are the dynamics for them to capture? And if you think you can go after a already fed market but capture them with new value offerings, you have to make sure that your offering is valid for your target user, target audience. So it is highly fragmented and you have to make your own due diligence on this from this aspect before targeting a specific location in Europe and starting a business there.
So there is that universal aspect of any business building or problem solving in like markets, where it's the problem
It's
first,
like,
not the company.
yeah, sorry, Jose, but it is like
Let's go.
combining both because you have to always make sure that if you are starting a AI-powered startup, AI-based, AI-enabled startup, no matter which one, you have to make sure that what will happen if and when one day OpenAI or some other company, large company you are using as a technology goes out of the market because you are not building the AI actually. Maybe you are calling yourself an AI startup, but you are not bringing AI to the game. You are using AI to provide your value offering and services to the customer. It is at some degree, I want to just exaggerate the situation, but it is almost like dot-com bubble to my understanding. You are running a restaurant, I'm running a restaurant. Am I a better restaurant just because I have a website? Not necessarily. It may mean I have better marketing. It may also mean I have I have more budget. It also means I'm making more money or I have more money anyway to invest in my company. So it can be an indirect indicator somehow, but it doesn't necessarily say I'm a better restaurant. So it is also valid for companies. You have to make sure that there is no change from the large players that you cannot control, such as OpenAI, such as Mistral, such as Gemini, that can, one, push you out of the market by making what you are developing a feature in their large game. And also, just because they are not counting one service, one function, one specific way of collaborating with other companies like yours. So since they are counting that, you also want to make sure that you are not running out of business just because of that. So it is about finding that right balance, being agnostic to the different providers of technology, and you have to have the perfect understanding of you are a company of what you are providing to your customer. Most of the startups we hear about, they claim they're an AI startup, but not necessarily. So I believe this is the exact point which separates winners of this game from the others.
Right, right. And one of the things that I think you mentioned earlier was, and before we even got onto this recording, was essentially that founders tend to lose sight of the go-to-market strategy of how to actually talk to those initial customers and frame themselves correctly. It sounds like it's not just around AI, but it's a bit beyond that. Is it that? Would you be able to elaborate more on like the go-to-market aspect or where founders are kind of falling short in that regard?
Sure. Actually, the largest issue when we are looking at AI-powered startups, they are generally positioning themselves as an AI. Currently, we have another company by Elon Musk, which is named XAI. But before that, we had another company which was named XAI. And I don't know if everybody is familiar with that or not, but they were providing very specific, actually, they are providing very specific meeting scheduling tools over Google Calendar. And when Google Calendar implemented this feature, it was automatically resolved. The company in the end acquired by Bizabu, but later they were shut down. This is the problem of positioning yourself as a technology company, not as the feature builder. So when you are positioning yourself as a technology company and as the XAI, not again, and I just want to emphasize this point, it is not the XAI we have by Elon Musk today. It is the XAI which was acquired by Bizabu a couple of years ago. So when you are positioning yourself as a technology company, you have to make sure that if you can, what you are going to do when that technology is not available at the price you are making this assumption. When they are seeking such go-to-market strategies, the every company currently is trying to make sure that their name is resonating with AI. And this is a very, very mistaken value offering in terms of their growth, because maybe some hyped investors and some hyped target large groups who are eager to implement different AI strategies. Because let's be honest, we have very large companies who are deploying tons of money to test different AI projects just because they can use AI better than their competitors in traditional operations, traditional industries, traditional verticals. They can run their business much more innovative way, much more efficient way, much more lucrative and profitable way. So even if they are like 300-year-old publicly listed companies, they can have an edge to their competition. So these companies are pouring tons of money to already existing products and services. And when you get along with the hype of the AI, after landing your initial customers, you can see great jumps given the fact that in small subset of the number of the users, in small revenue respectively, when you are landing large tickets, you experience a really sharp jump. And it can be combined with storytelling. And the convincing is the right word here. You can use this situation to convince other potential users and to convince other investors. But is it becoming a very successful high growth startup or a value trap, as we know for ages? That is a critical point here. And when I'm saying go-to-market strategy, one of the best ways to avoid this situation is having a very, very clear understanding of who is your target audience, what is the value offering you are providing, at which part, which technology you are using, and this AI can be a part of that, or you can be an AI providing company. You can even we can talk about OpenAI today, which are the provider of the, most of the tools we are, at least for me, most of the tools I'm more than 50% of the tools I'm using are coming from OpenAI. This is a fact. So you have to make sure that in that positioning, you are playing, as we say, especially in Europe, your own Maradona's left foot. I mean, your own unique competitive advantage.
Right. So to summarize for those of you out there, it sounds like you can ride the AI hype train, right? Ride the wave.
Exactly.
Are you actually developing a unique differentiator, a unique position in the market, or are you just simply riding the wave? Yeah, basically we have to, in our go-to-market strategy, understand whether we are one or the other and how we want to go about that. A truly valuable company, a truly valuable startup will have its own probably proprietary technologies, from proprietary systems and services that aren't completely just hype. Is that an accurate way to summarize it for the layman?
Yes, it's a very accurate way. I mean, in other words, you can try to put yourself as a founder into a mechanism where you are trying to make sure that you are not positioning AI as an enhancement. It is an enhancement to your value offering, but it is not replacing what you are doing. And you can validate the demand before scaling into AI models, which will also link us to unit economics in the future. And aligning your go-to-market strategy with the buying behavior of your customer. Especially in B2B markets, it is more like need-based. And for the B2C, it is like more like behavior-based. And also you have to, it is much better if you can also involve AI in terms of making sure that you are not losing opportunity in the table. You are also running better operations. You can integrate these tools like a Trojan horse which will give easier to build, easier to test versions. And I believe Trojan horses, not the ransomware, but since I'm from Turkey, I love the example of Trojan horse because it is located to a city which is very close to where I was raised. Anyway, so when you are positioning that very highly scalable, very cheaper today to test, very easier to develop versions of your product, it will also give you an edge to enter companies faster, which can make a giant change in your go-to-market model and your growth story.
Okay, so AI, when deployed effectively, can help you answer the question whether a business or a problem that you're trying to solve, the solution to a problem that you're trying to solve, is actually viable or not. That is one fundamental shift. Now, it's more so about, can it supercharge what's already a good solution, or will it replace it? So that being potentially a good enough summary, I want to talk a bit more about the unit economics idea, because it sounds like, and I've seen this with some startup founders saying that an AI startup seems to be more like running an electricity company versus an actual standard B2B SaaS, where pricing fluctuates based off of demand. So I just wanted to understand, how are you actually understanding unit economics, pricing, and a willingness to buy, and how to effectively manage all of that as a startup founder in AI or not?
Of course. I will give first, before digging, I just want to make sure that we have to analyze each 5 main segments, which are like AI infrastructure providers, model builders, application makers, AI wrappers, and enterprises, which are adopting AI tools, industry giants. We have to analyze everything separately, actually. But in the end of the day, you have to make sure that looking at your unit economics on the long run, when you reach to enough scale, and if you are also betting on the new technologies, when they are also coming to the price of adoption, you have to make sure that the price you are charging your target audience, whether it's your client or customer, is giving you sustainable in terms of business, not like an industry or environment. Business-wise, sustainable profitability. So you have to make sure that you are paying the bill, you are paying the salaries, you are paying the rent, and you are having enough money, because every company exists to generate value to their shareholders. So even if you are a startup, of course you are burning cash. This is the name of the game. And when you are burning cash, you have to convince, you have to be able to convince, and you better convince other investors to invest in your company, because you can reach to the point where you will be by yourself without invest external money, be able to run your operations in a financially sustainable way. I believe that is the secret. There are lots of different options. And one of the startups I'm involved with, DreamKit AI, for example, we are generating children's stories for the children who are experiencing issues which are having problems to face against. It can start with health issues. It can be a children staying at hospital. It can be somebody who is rather welcoming a new family member which wants to tackle the issues surrounding that situation, or anything else helping the children. So to have better story, to have better use of language, we can use ChatGPT 4. Or to have much easier cost structure, we can pick ChatGPT 3 easily. We can pick lots of different models also. And in a positioning, we can also make sure that we are flexible enough to let our enterprise customer to pick the model which they want our platform to run. It can be also one of the approaches. So it will give your customer to make a decision in the spectrum of quality versus price. I believe having this sense of business logic is very important, not only in the growth, but the survival of your company in the future.
So unit economics, understanding how to grow sustainably while paying everyone and everything along the way, is critical. I mean, businesses are in business in order to generate cash and ultimately value to shareholders. So, okay, so we're running up on time. We're actually past time. Time flew by. Just one last question. What excites you most about the future of over like the next 12 to 24 months of AI development startups, and maybe not just Europe, but in the world in general?
I believe sticking the core excites me most. What I'm trying to say is, I believe AI is a very strong trend. It is undeniable. But the winners, not necessarily they will be the smartest model makers. It will be the ones incorporating what technology is offering today and what it will keep offering in the future in the best way to their own business. Of course, if you are like OpenAI providing AI itself, a large model, then it means having the smartest model is the best way, having the most smartest offering, let me say, even not the smartest model, because if they are charging like $1 million per month, most likely they wouldn't be having this traction anyway.
Right.
So the thing I'm trying to say is sticking with the core issue on the need matching side and solving other people's problems, other companies' problems with the best optimum way, which is offered by the technology available today.
Okay. So I would really honestly like to just sum up, because it sounds what we've talked about today is critical to startup founders and their startup founders listening to this. Batuhan essentially broke down for us right on this session 3 critical mistakes or 3 critical points to consider when going about your startup journey, whether in Europe or anywhere else. First, that positioning and your value offering is more important than the technology itself. And that's essentially what Batuhan just communicated to us. It can't just be an AI wrapper. It has to solve a genuine problem, right? And AI or any sort of technology, it supercharges the solution instead of is the solution. Later, thereafter, the second point, we have to focus on the product, on the go-to-market strategy, on the value add. And that is the universal truth that regardless of where AI is going, what happens in the world because of it remains true, because people will have problems, businesses will have problems, and other people can solve those problems. And that's essentially the impetus for business. And the third is, when running a business, it is critical to focus on unit economics and make sure that when you're pricing and when you're growing, that you're generating value and staying afloat, which, considering AI startups nowadays, can be potentially difficult because of the surge charges and the and demand. But that is also fundamental to the healthy, sustainable operation of a business. So, Batuhan, what do you think about that overall summary? Think I nailed it?
Yes, I really liked, thank you so much for giving me this opportunity. It was very entertaining for me to exploring all of this together with you, having this conversation. It was both enlightening and also very useful for me to structure in a nutshell.
Yeah, same. Honestly, I would love to have another conversation too, because the European startup scene and standard universal laws of growth and operations are just fascinating to me. That said, we do have a time limit. Thanks everybody for tuning in. This has been Batuhan Ultunjel, a serial startup collaborator and a phenomenal person, honestly. Fabulous. Thank you, Batuhan.